to the halftime report, everyone. It is September 26, 2019. We have myself, we have Coach Noah, and we have Coach Gino today for a little bit of Theta Thursday, a little bit throwback here with Data Maker. I heard a little overlap there. Someone got their YouTube on.
We got her.
All right. Well, how are you guys doing right now?
I'm fantastic. Absolutely fantastic.
It depends if you're asking physically, mentally, socially, spiritually, financially.
All right.
Definitely don't ask me sexually.
Too much information. And moving on.
I there? Let's jump right into markets, guys. There is a lot of news headlines around, but you know what? The market doesn't seem to care about the news today. There are a few reports that came out that we're going to get into, but what are we seeing in the market today?
A little bit of selling pressure. I mean, from the overnight, watching the futures overnight, they just kind of hovered near the close all night. And then as the market opened, we were seeing some modest selling. Nothing crazy. I don't know that it really changes our technical bias at all. Just kind of hovering between the 9-period moving average. We're still above the 50. And we're just trading inside yesterday's candle. So again, a little bit of selling pressure after yesterday's kind of miraculous rally off of the 50 after dipping down and then putting in again. I thought it was a pretty solid rally yesterday as it just continued to fade up right into the close. So it's pretty good, pretty solid day.
That's exactly what I saw. I haven't really done any stock or option trading at all today. Forex market's somewhat boring itself, just kind of continuing on with the patterns. Gino, what are you seeing in the markets?
Let me get him off mute here. I'll tell you, I'm seeing a lot of stuff coming out right now. What I'm noticing is, one second here, I'm just going to grab my notes, is notice that real estate is kicking butt. I don't know if you guys noticed it on the sectors, but real estate is actually the outperformer today with everything down. What does that tell us?
Well, I believe existing home sales were up.
I was just about to say that the home sales and stats and building permits are all up. Those reports came out. That's definitely going to help the real estate sector.
Yeah. So we had a lot of economic numbers this week. And I think we started Tuesday with the house pricing index and the CoreLogic Case-Shiller HPI, which is the home price index, right? That was Tuesday. Mm-hmm. And then I'm just sticking to the housing type stuff, real estate related stuff. Yesterday, Wednesday, new home sales, like you said. And then today, what do we have?
Today we had, actually today, the main thing I was looking at was the final GDP, but that just was right in line with.
Well, today we have pending home sales index.
The pending home sales.
Pending home sales in it. Look at that, 3 days in a row. Can they just do all three reports in the same day?
Well, that'd be nice.
Would that be logical? But here's a problem. It's 3 different reports, 3 different groups, 3 different surveys, what have you. So they all gotta wait to see what the other person says.
That way they know what they're going to say. I'm kidding.
Yeah. So yeah, they're just copying the first report. And so here's the thing. 3 days in a row, 3 real estate. So today is the last day of that news. So even with the market down, think about this. Are people going into real estate? I just want to get everybody's opinion. If you're online, you're on YouTube Live, great. Are people going into real estate type stuff? Like you can look at XLRE, IYR, XHB. They're the 3 top performers on my list right now. Now with the market, let me go get the most recent. What is the net change on the S&P right now? I'm going to look at the SPX. With the market, what are we down exactly right now as we speak? Right, down 0.34%, about a third of 1%, right? A lot of that's driven by the big FANG stocks. But here's the thing. The real estate's up 2/3%. It's completely outperforming. Home builders up 0.5%. So real quickly, just hammer through whoever's on the screen, IYR, XLRE, and XHB.
Yeah, I've been kind of rotating through them as we've been talking here. And XLRE kind of has a consolidation pattern. Looks like it's a possible confirmation to the upside. IYR.
They all triggered.
Looks more like a high base, confirming up. And then XHB.
So my question to you is this, and there's no correct answer. We got a little cup and handle right there on that XHB, right? Is usually going into the year right now, XHB doesn't really start taking off because they're going into winter. Rain starting, all that stuff. Home builders start backing off. But with interest rates dropping and everything, are people putting money into real estate because they think that's going to be a great sector going forward? Or like, is that the strongest attracted sector? Or are people jumping into real estate because it's better than the stock market?
There's a handful of questions there that the sector itself is mainly, it's a little bit of both. The real estate sector itself is mainly based on the REITs. So those are the ones that they're going to have constant cash flow. Even in a down market, cash flow is king. Secondly, when you're looking at more common investors, when they're looking at home sales and things of that sort, and those builders, like looking at all of these, they're all up. People have a tendency to like something that they can put their hands on, that they can kick and see and physically touch when they're unsure of what's going on with the market. And that's one of the reasons that gold itself is precious metals.
I think it's a little bit of both. You know
value,
why? I think because when we talk, is it a safety play or is it just a great investment? Well,
both.
Yeah, it's both. Because the next two sectors I have on my list that follow that, staples and utilities.
And that falls right in line. People are going to pay their bills in any market. Utilities, they're going to be consistent, and people are going to buy the staples. So staples being the things that consumers have to buy. It's a staple.
And then right after that, we got industrials and then aerospace, which are kind of related. But that's what, and then agriculture and then gold and silver. Then everything else is red. So it's kind of like the flight to safety. And when you look at the SPY or SPX, it's because we're on support. We're testing it. And Noah and me are big into this, right? Noah, ready? What usually happens after we test the high in September? The last 20 years.
After you test the high in September, you see a sell-off.
Yeah, you see a huge. Did you know September is the biggest month for the sell-off surprise? And it catches everybody off guard because it's usually when we hit a high. We have the seasonality chart on tackletrading.com every week on the newsletter. And I keep telling people about that, is buying on a dip in September can be very dangerous. And you're looking at a W topping out there. Is it going to form a cup and handle?
Wouldn't it be an M?
Well, that W can turn into an M. Exactly, Cody. That W. So where is, I'm going to let Noah take over on this one because he's an expert at seasonality. Is Noah, where is our trigger if this thing is going to sell off like the last 20 years?
Well, I think the trigger is pretty clear down here at about 29.50 below the support resistance zone and that key moving average, the 50-period moving average. Now, how hard it sells and how far, you might see it dip down to the 200-period moving average and the old support resistance zone if it breaks. And I'm, always poised and ready at the trigger, but we're a little late, Gino. Normally this stuff starts about mid-September, and here we are, what's the date again? The 26th. And a couple days left in September. So there's still time to marking that south. And we're just a little bit off those all-time highs. And, again, some of the economic data has been a little soft. I wouldn't be surprised either way if we break out to the upside. I'm a little bit more geared towards the downside personally, just kind of watching that. But again, like you're saying money's moving into some of the defensive sectors, and that, Matt's in the chat there confirming that he believes.
I was just about to say, why don't you take a look at the SIN index as well? Because Slavic made the joke. What about whiskey, cocaine, and cigarettes? And you know what? The SIN index can actually protect you in a recession because people still buy those.
Perhaps.
I mean, would you call them commodities? What would you call those indulgences? Those.
I don't know about that. Father Stockaducci would probably have to speak to the indulgences there, but. Yeah, I think it's just, hey, they sell addictive chemicals in it. I don't know if you put some of your consumer staples in that same ballpark, but I think if you look at the XLP here, again, that's, showing some signs of strength there. And then the utility index, I think is the strongest of the bunch, just ripping through the roof. So that looks really, really strong there. What are we seeing out of gold this morning? After yesterday's sell-off, we've got a small inside doji there, showing a little bit of sign of strength.
Even though you're seeing some safety plays, the reason I don't think gold is running is because the U.S. dollar is continuing its breakout from yesterday. So I think that's holding back some move into gold. So yeah, if you take a look over at $DXY.
Yep.
It's continuing its breakout up, which is really strong, which also makes day trading pretty easy. Just go long dollar and short, well, pick one. And I think that continuation in the US dollar would not be pushing the gold down as much as people are still flowing into gold. So I think gold's probably very liquid between money moving in and out of it at the same time.
So let's take a look at gold and silver. So gold, again, showing a little bit of slowdown. Let's take a look at the SI. Matt's there in the chat talking about the silver not giving a stronger recovery there. So again, I don't understand SI, not recovering yesterday's BS move to the downside after another BS comment on positive trade yesterday versus negative trade yesterday. Well, I don't know. The one that's also had me kind of scratching my head a little bit here, not really scratching my head, but did y'all see the breakdown on Bitcoin?
I did see the breakdown of Bitcoin.
It continues to drop. So here's a bigger question. Are Bitcoin owners taking their money out and putting it into utility stocks?
No, they're not.
This
is institutions that were playing around with Bitcoin saying, you know what? Not worth it. Too early, too soon. Man, get rid of it.
I'll tell you, when you get that triangle there breaking down, Noah, what's the target? I think we're almost there.
We're almost there, about that 200 period moving average in the gap. So,
yeah, there's
so probably call it 7,000 ballpark.
Because if you measure that triangle, the width of the, what do they call it? Not the apex, but the base. It's supposed to be the target, right? So it looks like when it hit the right there, when it hit, what's that doji on your green there? The next one to the left. What is that? Your 50?
That's a 50. Yep.
Yeah. So between that's 91 to 1390. That's literally 4,000 or 5,000 points.
Well, 40%. Let's just put it in
40% in a week.
Well, 30. Yeah, your target there, but I mean, by the time you get there, you're at going to be at 30% correction in that. So that's
we're
pretty
going to 200.
Yep. It looks like it's got plenty of momentum to the downside.
I think this also answers that question that a lot of the core Bitcoin holders were starting to literally state over and over, and you could see them on Twitter and different things saying that Bitcoin is overtaking gold as a safety. Obviously, this is proving that completely wrong right now.
Yeah. Try to wear your gold Bitcoin around your neck. It's not going to work.
There you go.
So check it out, guys. This is why trading is so important, technical analysis, and why they should teach it in high schools and college. And probably why they don't is when that triangle breaks, most of the time looking at back testing charts, it takes a long time to get back up there. When a triangle like that breaks, it becomes so much overhead resistance that when it does come back up there, there's a lot of people taking their break even and getting out. So there's gonna be a kiss of death. The history of this thing going back up, I don't know when you're going to see new highs on this. So all the Bitcoin holders out there, better transfer that over to something good before it really drops. Because technical analysis and guys that look at, and by the way, that's the only way to invest in Bitcoin is technical analysis, right? What are you gonna do? Fundamentals? Let's go look at the PE ratio.
Yeah. Not a buying opportunity till you see some confirmation to the upside.
There's no seasonality.
Yep. and really no fundamentals to back you up, because I mean it is all I think purely speculative, and looks to me like the speculators are jumping ship at this point in time.
So when I see a triangle like that break, a big base like that, that reminds me of stocks that just like Krispy Kreme donuts, Taser, who else went bankrupt? Just overinflated, and man, it's just done for a while. So shorting it's good, and there's other strategies you can do. I gotta admit, I'm still investing in it, but I'm mining it. Cost averaging it, so as it goes cheaper, I'm mining more, and hopefully some of these miners will stop, so they stop sharing the profit. So that's the only way I can see to investing in this is you got to get it for free.
Yeah. Good luck there, because it's still not free. You're going to spend money just to try to mine it. But
yeah, and the computers aren't cheap.
Nope, they're not. And of course, you got to keep that bill on and pay the cable bill. Well, I was just about to say that. Noah, why don't we go ahead and finish working our way through the sectors and then move on to oil that we haven't gotten to yet. So what are you saying on the NASDAQ versus the S&P or the Dow?
Same song, second verse. The NASDAQ's right there on that support zone. It's currently testing the 50-period moving average. It's even poked a little bit below it. And that's also that support resistance zone and some of those previous highs. So it's showing a little bit of weakness there. And again, some of the stocks that are making up the NASDAQ, when you look at like Apple, for example, Apple's, in a nice little consolidation pattern. Some of the FANG stocks that make up that index, kind of take a look at what makes those up. If you look at like Alphabet, It's showing some strength yesterday, today, pretty flat.
What is it? The top one in the NASDAQ right now looks like to be NTES up 2.9%, followed by WDAY.
Workday and NetEase are showing some strength.
Let's see. Some of our top losers in the NASDAQ include CTRP.
CTRP down. And then I know Netflix.
That's a nice breakdown.
Netflix was giving up some of its gains from yesterday. So it had after, sharp sell-off, a little bit of a dead cat bounce. And then again, kind of looks like a bear retracement at the moment.
And one more I want you to take a look at is Micron.
MU.
Oh,
Don't they have earnings tonight? Micron has got earnings here, so they're inside.
All right, we got to see what's going on. They're down almost 2%. What 1.95 right now?
Yep, and they're reporting after the bell.
So keep an eye on that one, guys. They're a gap during earnings. Let's see, gap up, gap down.
A little bit of a gapper there for sure.
Yeah.
So NASDAQ.
Play for
let's switch gears and take a look at the Dow. Dow is still riding on that rising 20-period moving average. And I think out of all the indices, it's showing the most strength.
It is. This one didn't have nearly as big of a retracement as the others.
Correct. So slowing down to that rising.
Did you go over Amazon? I didn't catch that.
Oh, I didn't see. We did not look at Amazon. We skipped.
That's a big mover of that.
That's a big breakdown. Good catch, Gino. Yeah, that's the big key support zone below the 200-period moving average.
I'll tell you what, man. This thing breaks. Look at the ATR on this thing. $31. The ATR will double if this thing breaks.
That would be probably one of the
50 or 60 ATR.
Big contributors if we do see a market correction to sell off. This could be one of your leaders right here. With from a technical perspective, you got some support down here at 1700, but that 1740 level and the 200-period moving average is just kind of
real quick. Noel, what strategy would you do on that?
Well, that's a good question. If I'm looking at a big breakdown on that,
you have to be an option trader.
Well, probably would go with some sort of debit spread if I'm doing a speculative directional.
Yeah, before volatility spikes, I would say out of the money debit spread with that big of an ATR.
Yeah, that could certainly.
And maybe even a wide fly, debit fly, and fund it with a bear call spread.
Now that's a little gold nugget right there. When Gino talks about some of those trading ideas, that's always fun.
Gino gem.
Sell a bear call spread and fund your speculative directional.
Now here's the thing, guys. I've done Amazon and Google many times with butterflies. You have to do a limit order. You have to ask better than the middle of the. Don't go ask. It's a wide one. You got to go better than the mid. Go a dime below it because it moves around and you're likely to get filled. Do not do market orders on stocks like this.
No, not with those bid-ask spreads. That is for sure. So yeah, Amazon, I think it could be a big leader if the market does head south. And that I think maybe lends itself a little bit to some of the weak consumer confidence reports we've seen come out lately. So back to Dow showing some signs of strength. And then when we were looking at, let's take a look at the Russell real quick. It's probably making those condor traders pretty happy, acting relatively neutral, still hovering above the 50 and 200 period moving averages. And
this has been, and there's a way to set up your condor where you actually leg into each of the wings by themselves. If you would have played this every time it's run up to 1600, you sell, and every time it runs down to 1450, you sell it as well, then you have some pretty wide condors. And this thing just consistently just keeps hitting its head 1600, finding support at 1450, hitting its head at 1600, finding support at 1450.
Well, for a week or two ago, I was thinking I might need to hedge that if it ran up, but it did not. And I agree with you on that. Legging into your condors can sometimes improve the process if you do get a good sense of technical timing there. Just a little bit of time passes between putting the legs on, but yeah, absolutely.
Well, if you're going 60 days out, you got plenty of time to work with.
Absolutely.
Yeah.
All right. Let's switch gears and take a look at oil. Now, I read a lovely little report on oil here and some of the oil producers at this $55 a barrel mark. This is really anything below here. This is where the producers, the frackers, et cetera, they start to struggle with their expenses because they get the cost of production, refining, and everything else and expenses that go into it at $55 a barrel gets down to $50 a barrel. They'll start shutting down the pumps, because it costs them more to produce than they can sell it for. So at $55 a barrel, we talked about this filling the gap yesterday. Gino, we always love to hear your take on oil because you've got the insiders. Have you talked to him lately?
Well, I don't have any insider news at the moment, but you are absolutely right, Noah. The cost that, this is their primary product. The big companies needed to stay at a certain level, especially the little companies. ExxonMobil and all those guys, they're fine. They'll create profit. They can lay people off. They own their properties. They don't lease.
They have back cash and things of that sort that they can use. They always have a buffer. It really is the small.
It's the small companies that take a hit. Even a lot of these small companies aren't even publicly traded. So when it starts getting under $50 a barrel, these small companies, they're still leasing their property from the big guys. And that's where they really struggle. So yeah, I personally, Noah, am always doing naked puts on oil. So where am I targeting right now? Anything in the 30s, and I'm 50 days out on the future puts. I'm under the 40.
What's the delta on that right now, Noah? In the 30s?
Oh, let's go.
0.03. I can only guess based.
Let me see where I'm at. I'm on the deltas.
Talking Octobers.
Yeah, the 50 days out there, December 50 days. December's 50 days because that's how the futures do it. At the 35 level, 35, 36, I'm staying below 40. Anywhere below 37 and a half, I'm good. Because I could take assignment at 37 and a half. I could cost average and all the way down to 33. My deltas are 1.5.
Pretty low deltas, a little bit of premium in there.
Yeah. So what we do on futures traders, what we do on this is we sell those. And by the way, it's 1,000 barrels. So that's really $70, not $7. You got times those prices there by 1,000, just so you know. But anyway, they'll sell a bunch down there where they want to be assigned. I have no problem being assigned in that area and turn it into covered calls. It's one of the best returns for covered calls you've ever seen. Blows USO away. In fact, you can't go this far out of the money on USO and do naked puts. So that's why I do oil, is because it's one of my favorite trades. And honestly, it's been a long time since I've taken assignment because it just won't dip down there. Because what you said, Noah, there's a big urge for them to get the prices back up.
Well, and again, technically speaking, it's relatively neutral. This is about as neutral as signal you can get. I mean, it's literally hovering at the 50 to 200. All the moving averages in the same area. Prices have been consolidating. You did get breakout on the news of again, oil tanker bombings, and it's just corrected, filled the gap.
And kind of amazing how good oil is doing with the dollar rising.
Are they back up and running yet? Let me check.
Last I heard was probably a couple days ago, but they were talking about being back up at 70% of production. So that doesn't necessarily help with inventories. And I think they do still have a glut of inventories, which will keep prices somewhat suppressed. And then this time of year, seasonally, I don't expect a lot out of crude oil until about February. Typically our consumption drops, because again, as weather turns colder, we're just not out using as much. And, the formulas change a little bit here in North America. So supply and demand, I think with where it's at, I have no problem with doing like a Geno strategy out there, selling the naked puts way out of the money. That's awesome stuff. That's actually really, really smart. Again, with the futures, you got to make sure you understand the leverage and the risk involved with that. But from a technical perspective, I don't see a directional play here at all.
Yeah. February is the month. February's month seasonality where you see, and I'm looking at the seasonality right now in oil. Just in the last 10 years, February, 80% of the time, oil's up a good 3%. That's just seasonality. 80% of the time in February. Right now, though, September, it's 50%. So it's 50-50 from this point on. And just like the chart showing you, this could go up or down, right? So, you got to play it smartly with the triggers. Could it go lower? Yes. Could it go higher? Yes. But I am really surprised it didn't go higher with not only the news, with all the corruption overseas, but also the dollar, man. The dollar hitting these highs. It's like usually you'll see commodities going down, but gold and oil have been resilient.
Well, again, the dollar, up there, if you put that back out into like a long-term perspective on the dollar, it's got a lot of overhead resistance out there at 100, and it's, we're trading at 13 on the index. And so overhead resistance at 100, but I don't necessarily see the dollar slowing down until it gets to that $100.
That's a nice trigger right there, isn't it?
Well, if it breaks above 100, yeah, absolutely. I mean, you're not too far off the all-time high at 103 there. But, short-term perspective, you're getting towards that range up. You can kind of see that higher low in there. And again, there's some upper shadows.
We need to see where it closes today, because each of these 4 wicks back here, that highest one being the 99.37 cents, it's popped up and within that same day been driven right back down. So yesterday I was kind of expecting that, a little bit of that, but it held that breakout point, which was really strong. Today, a continuation of that. If it closes up where it is now today, I can definitely see this as a really strong signal as a possible breakout in the coming week. Not going to be making any Forex trades on a Friday, so tomorrow I'm going to be really shutting down, taking profit. But come Monday, if we can get a push out of that, I think it can quickly run to 100, and then we'll wait to see if we can possibly break out of there. But based on what it's been doing, it'll run up, base, run up, or run up, come back down. So it's very consistently up and down. So I don't expect it to hang out up at 100 too long. I expect it to hit 100 and come back and retrace.
Absolutely. So that's pretty interesting. Take a look at the dollar there. So yeah, awesome. Where are we going to head next here? We got dollar, we got index, we got oil. We've taken a look at gold and silver. Let's take a look at natural gas real quick.
Natural gas, I think if you haven't already,
wow,
this thing's called a reverse. Oh no. What happened today?
A little selling pressure today. So breaking down again, that selling pressure doesn't necessarily scare me off yet, but I've been watching this little run here, and I had a pretty decent I caught it a little bit earlier, and I closed some trades out as it hit that 200 period moving average. But this pullback down into the rising 20, I was expecting a little bit more of an upward movement. And again, we're getting a little of a breakdown today. So again, I'm not sure if there's any news behind it or not. We'd have to go double check.
I'd have to take a look, because I was really getting to the point where I'm calling natural gas a reversal. Today's candle gives me a little caution, but it does have support right at $2.40 or so. But let me see if there's what's driving that news right now.
Gas report, according to Mark in the chat.
Alrighty, I got to dig into that. I have not been trading natural gas for quite a while, because when it started that big negative downtrend, just couldn't keep up with the naked puts. So I've been a stay away till I really got a good signal that this thing's reversing, and I was starting to get excited. Today kind of worries me again.
Well, that had pretty good textbook look for a reversal with the building volume. Today's volume early in the session is still relatively high for that selling pressure. So we'd have to go double check that report and then watch that 50 period moving average old support resistance zone. If you see continued selling pressure, that would be a nice technical catalyst for it down there as well. So Frank's in the chat. Always love it when Frank's with us. Lots of selling in healthcare today. Let's take a look at that. Let's take a look at the XLV. There is some selling
right now.
Absolutely. Look at that selling pressure, Frank. Now, breakout Frank also could be breakdown Frank, I suppose. What do you think about that support zone there at 88, call it 88.80 ballpark?
Wow.
That's a big support. Now, healthcare is normally one of those I expect to be a little recession resistant.
Yeah, it's more of a safety play sometimes.
Yeah,
healthcare has been decoupling from its safety play just because of what's kind of in that sector. It's not all the health insurance or the health care providers that are in that space. You also have a lot of stuff with the care, the devices, the pharmaceuticals. They can have an effect on healthcare, which could be driving this down. Now, you pointed out that 88 support level. I kind of want to say that trend line that you had on that chart, go to the previous chart you were just on, healthcare sector, that's already broken down. That if you were to continue that trend line that you have, that break's already happened.
I can fix that real quick. Check that out. Yeah. So, just to redraw your trend line, that's what you're supposed to do.
Oh, now it triggered.
Yeah, I think you're right. That trend line is in the process of testing, violating it. How fat or where you place that trend line is a little subjective. Typically you want to go off the lows. So I'd say it's right there closing below it. And again,
to wick or to not wick. That's always the question.
But Frank throws out some interesting candidates there. So we'll take a look at UNH. That's got some pretty heavy selling pressure in there. CNC got, nice breakdown on CNC.
Nice breakdown. How much time? Do we have time before earnings to play that one?
And Humana. Let's go back to those are great looking setups. Breakdown Frank. You bet. If you're not following Frank on Twitter and you're not following the tackle on Twitter, you're missing out, because those are kinds of charts that it's getting out there. Healthcare used to be a safe haven, considerable. Matt's out there. I agree with Matt. Healthcare is no longer a safe haven.
Yeah, really the biotechs are driving the healthcare right now. Have you seen the BBH or IBB, the ETF of the biotechs? They're starting to. Yeah, there you go. Look at that. See how it's kind of leading it to the downside. If you compare that to pharmaceuticals, PPH, you're going to see that PPH is holding in there still, a lot of support, but the biotechs are the bigger movers. They're more volatile. And the top 3 biotechs, which are considered healthcare, Amgen, Celgene, Gilead, and especially Amgen. Amgen, nice setup to the trigger to the down. Is that a weird cup and handle upside down there, Noah?
Kind of inverted cup and handle there. I see what you're talking about.
It's a weird pattern, isn't it?
Yeah, well, it's got but kind of more like a bear flag type breakdown, but it's got the same general nuance to it. And I think the support zone breaking below that 50, that's a good trigger with the target.
And by the way, guys, that pattern, I don't know what you want to call it, but for me, that really pays off when you do triggers below that.
Yep.
Because what did it do? It did like a kiss of death up there. You see it?
Mm-hmm. Absolutely.
Right there. Boom. And look at the volume on these red candles. I mean, we got a nice green spike. It faded. And now today we're going to have better than average volume on this trigger. And below your 50, I'm guessing, I think it's going down to 200.
Yeah, I think that's a good target, good technical target for that. What were the other ones you threw out there? Celgene. Celgene,
Celgene is the strongest of all of them.
Yep.
Yeah.
And then, but guess what? If the others break, this will be next. Gilead, GILD.
Ooh, that's got a lot of support right there. So if that, this is one of those I'd throw on the wait and see, but you could momentum trade that into support. And
if that support breaks, though, that's what a quadruple 1, 2, 3. That's like an octuple.
I don't know how many times. Let's count 1, 2, 3, 4, 5, 6, 7. That'd be an 8th test. So yeah,
that would be an octuple.
That's
an octuple.
An octuple support level bottom thing.
Something.
The Octomom pattern. So yeah, Gilead, Vertex, and the rest of them are a lot smaller, but you got Biogen's in there, BIIB. And some of these companies, I mean, look at that thing. Look at what is that? Let's gap down and just stay there for a while. There's now that one right there. That would check this out. That's when you don't want to do a condor on, Cody, right there. Why? Because when it decides to break out of that channel.
Because when it does break, it's going to move.
Yeah, that's a condor killer right there. That'll put you out of business. And when do I say that? Because did you notice that gap was not on earnings?
No, it was not.
It was an unpredictable. Nothing like waking up to your bull put on that. You're looking, hey, my credit spread's deep in the money. And wow, no way to fix it. So this one here, look at today's candle. Today's candle on this one.
Pretty solid move.
Yeah. And you just got to be careful with, I'll tell you what, biotech is dangerous if you don't know how to play it.
Well, when I was a kid, Nancy Reagan taught us, she said, don't do drugs.
Yep.
Don't do biotechs, don't do drugs. So stay away from pharmaceuticals and biotechs, just because they do have, it depends on the company. Obviously, some of them have better diversified portfolios of products than others, but they're highly speculative. And then they do have the tendency to gap, unexpectedly. So
these are big companies too.
Oh, absolutely. So Jenny, you'd mentioned earlier that some of the market internals were showing weakness.
Yeah, I was looking at the internals, and what I look at in the morning in my report, let me just update it right now. So the advanced decline line, the advanced decliners, I look at that first thing. We have right now, it's a little bit delayed on the New York Stock Exchange. Well, let me just go through here. New York Stock Exchange advancers are 1,200 roughly. Decliners are 1,650. So what's your common denominator there? 4. So three advancers for every 4 decliners. The NASDAQ, though, is where the weakness is. Advancers are under 1,000. Decliners are over 2,000. So for every advancer there is in the NASDAQ, there's 2 decliners. So when I look at that, what does that tell me? Yeah, the markets are all down, but who's really got the most stocks down? NASDAQ. And like you saw, we saw the biotech. So healthcare, we were talking about, you might have pharmaceuticals and insurance companies. They're going to be in your S&P and Dow and some of those type Russell type things. But when you start talking biotech, you're talking NASDAQ. So how you find weakness is this. Which market is internally the sickest when it's bearish, right? Or the healthiest? And that's what the internals tell you. It's just like a doctor.
Now, for our students out there who don't know, how would you show them these internals? What would they look at to see these internals that you're talking about, Gino?
Oh, God. I use briefing.com, stock market update. I use TOS. In TOS, you can simply, if you don't have TOS, you have to use a free website like Yahoo Finance, briefing.com. In TOS, my indicator is $ADVN, right?
Yep.
And what do you got there? How many advancers do you got there?
That's the NYSE Advanced Client Issues, and it's showing 1179 at the moment.
Yep. And then decliners is $D as in dog, ECN.
And that's at 1593.
Now, here's an interesting thing, Noah. Go ahead and put $advancers minus $D, and it'll tell you the net result.
So give me those symbols one more time. It was
$ADVN
minus
$DVEN.
DECN.
DECN, decliner. Yep. And there's your net result, negative
Minus
400.
Yep.
Now explain how to read that, because to anyone that's looking at that is some radio noise.
Okay, so what you're looking at is this. Is there more decliners or is there more
Zoom in a little bit, Noah.
What's that?
Zoom in a little bit for me.
Yeah, you bet.
There we go.
So 0 means there's the same number of stocks advancing versus declining. If it's a positive number, advancers are winning. Because what you're doing is you're taking advancers and subtracting the decliners. So we're a negative number. So guess who's winning? Decliners. By 400. And you can see how far it goes down. So it's not real bad. It's not real bad. But so this is the net result. Now, I like to look at this because it's real time. And it kind of tells me sometimes, guys, check this out. Sometimes the market will be up and it'll be a negative advanced decliners. So what does that tell you?
Some of your heavyweight stocks are
big fish. The big fish are carrying the market.
Yes.
Yeah. So I like to look at the scoreboard of the market. Is it up or down? And is the internals up or down? Because let's say the market was up right now, I'd say it's a week up. It looks good on the outside, but all cylinders are not firing under the hood. It's actually sick. So what happens? You start getting real red here, getting round down to negative 1,000. You start getting down to 1,500. You start noticing that things start changing. And this right here, this advanced decliner, by the way, this number you're looking at is built into a lot of internal advanced indicators, McClellan oscillator, a lot of those fancy ones that you hear out there. I use it for my $AOR high low. So that's another one. If you guys want to check that out, that right there, I should be charging for because it's really, really interesting.
Well,
there you go.
This one Gino puts on the newsletter for our pro members every single week, and it explains what you need to be interpreting while looking at this. So for all of our Tackle Pro members out there, make sure you're watching that newsletter every weekend with Gino explaining what the arc low is telling you.
Yeah. So if it's above positive 50, buy on dips. If it's below negative 50, sell on rallies. So basically it's neutral. It's between the negative 50, positive 50 zone. And by that way, that positive 50, negative 50 is the same as the McClellan oscillator, which has been around since the 70s, I believe. It's the same thing. The only thing I'm doing different here, guys, is I'm not using advanced decliners. I'm actually waiting for it to trend. So what that means, if something's hitting a new high, it's definitely a bullish trend. There's no arguing it. If it's hitting a new high for 3 months, it's definitely bullish. If it's hitting a new low on a 3-month chart, it's definitely bearish. So this is counting up the bullish stocks minus the bear stocks that are confirmed. And right now we're neutral.
So he's talking, you can see how back between February through halfway through April, how it just kept hitting those highs up there. This is what Gino's talking about, is these periods of it hitting those highs is when he knows that he's staying completely bullish. Then once he gets his first thing to go bearish, you see it from mid-April through June. You see how it keeps hitting those lows. Whereas now, from August through today, see how it's not really doing either? It's just sitting right in a little range. That's his neutral signal. So between his bullish big indicators in that range versus the May range, the bearish. Right now, we're just seeing neutral. So that's really, I mean, we've been saying it for the past couple of weeks that we're in a cash flow market right now. And that's because we're not really trending one way or the other. Don't try to force something that's not there. We're seeing neutral market, cash flow off it. Just sit back, be lazy.
Well, the old saying is the trend is your friend. And, we're pretty neutral on the market. You don't really have established uptrend. You don't really have established downtrend. You've had whipsaw and range bound trading. And then a very news driven market, which makes swing trading really, really difficult. Directional trend trading less, not effective at all. And then your cash flow is really what you got to focus on.
Well, what's interesting on that is this. Look at 9/4, September 4th. Where were we at? September 4th, we got a first buy signal on there. So you got to zoom into the last.
So 9/4 right there. Yep, let me zoom in.
So 9/4, we made a nice clear. There it is. It was above 50, right? 9/4. The day before we pierced above it, we didn't close, but that day we finally did, right? So I want to see closes above 50. And so 9/4, it was telling me there's a lot of stocks making new highs. It jumped out of that neutral range. And that tells me, hey, you're going to start seeing some stocks starting to break out. So where was the SPY on 9/4?
Well, let's go take a look.
Because this was so even though the market might have been up or down, I'm not sure. That was a very strong internal, right?
9/4
right
was
there,
about to press against its resistance level. It was looking for that breakout. And what happened on 9/5?
Pop.
Bam. So if I had to think on 9/4, is this going to hit resistance and stop, or is it going to break out? I'd have to take the breakout side. And it did. So it just put a little bit more odds in my favor.
That's a pretty big Geno gem. Like that's like 4 or 5 carat Geno gem right there.
I'll tell you what, that's worth a like and a subscribe, right?
That is worth a like and a subscribe. That's worth a share, guys. Like I want you to take the link to this video and share it with one of your friends. Put it in an email, put it on Facebook, share this video because of that Geno gem right there. About how long are we into this? I can even help you guys out with the time. You can say that Geno gem happened right about 45 minutes in or so.
Yeah.
15 minutes after the hour. There you go. All right.
So internals are really telling you the inside picture. Now check this out. Where was the Russell on 9/4? Check that one out. So remember, stocks are making new highs, and that counts the Russell ones too. 9/4 is where in Russell?
Down here on the inside. Yeah. Wow.
So it was actually telling you that was a failed trigger on the swing high there. See that swing high the day before? So there's your swing high trigger, and now you're going, oh shoot. That tells me what? Tighten up your stops on your bear trades. Because look at that, Russell triggered the day before on 9/3. And if you were trading a stock like the Russell, which, there's a lot of them related to that, the small caps, you're probably going, oh, nice trigger. I should have taken profit yesterday. And then on 9/5, you're stopped out. And the internals kind of warned you, So market turnaround because of the internals. So that AR high low, by the way, it's looking at not just the Russell, it's looking at 8,000 plus stocks, which means the Russell, the NASDAQ, S&P, the Dow.
Well, I mean, it's everything on the Archipelago Clearing Network, right?
Everything gets a 1-for-1 count, not market cap weighted.
So that is, again, above 50 is your signal.
I need to see a close above 50. I like
50.
to see it pierce 50 at least twice. You know what I mean?
And then a close below 50 for the bears.
Yeah. Very simple, right?
Beautiful. Well, I think with that awesome Geno gem teaching lesson that we just had, how to use an oscillating indicator in your daily routine is a fantastic note to end on. So I'm going to ask you guys for any final thoughts, and then I'm going to send us out.
Oh, my final thoughts are, one, give us a like and a share. Follow us on Twitter if you're not. And then Father Guido Staccaducci, if I'm pushing my own personal agenda. We always have a good time putting out some great content, some fun stuff.
Are you and the Father pretty close? You know each other pretty well?
Well, yeah, I confess to him all the time, but but only when I commit market sins. So I'd love to hear that. And then what do we have on the agenda for tonight?
Gino, that's a good segue over to you because
I am going to be doing we have a great, not only journal, but a way to position size journal, which is our theta sheet, our worksheet. And on Thursdays, we go over all the cash flow strategies. Tonight, I think I'll probably do covered call tab and look at the returns and whether it actually tells you if it's a good covered call or not. We go in depth, guys. We take a basic strategy, we teach the basics of it, and then we do what no other school out there does. I go in there with whoever's in there with me, and we just say, what do we do with this? Is it an in the money cover call, out of the money? Do we split it up? How do we do it? And we break it down. So we show how a trader uses it, not just the black and white book text, how we break the rules sometimes for the better. And we go from very basic to very advanced. So I take every little trick I can think of and say, okay, what are we going to do with this? So everybody, cover call is a very basic strategy. And honestly, it is a very advanced strategy too, if you know how to manage it right. It's the starting point of spreads. It's when you say, I'm taking a stock and I'm going to sell a call. That's a spread. It really is. You're long and short. And then from there you go, I'm going to replace that stock with a long call. Now you're in a diagonal or a calendar. And it's like anatomy of a spread. But once you understand the cover call, you can use it in your investments or trading, your 401ks, your IRAs, your managed accounts, passive accounts, good fundamentals. You could use it on commodities. I'm going to find out what return do you want? And then you can shoot for that. And Matt Justice even has a thing on our reports, our spreadsheets, our tracking sheets called ROID, ROID, return on investment over delta. And
that's a really uniquely, just a really cool proprietary concept right there.
That one is. So definitely gotta have the spreadsheet to get that one out. And with that, guys, I have to say, if you haven't liked already, we are about 50% right now, but I knew that that's not the high that we were at. I think we had a high of almost 80 subscribers watching today. So there are some people out there that need to click that button for me. Make sure you subscribe. Ring that bell if you want to get notified every time that we go live or every time we post a new video. Google and YouTube can let you know on that. And if you really want to become a part of the community and you haven't already, make sure you get over there and check out the 15-day free trial to see all these back-end things that our pro students have access to. And to do that, you can either click the link down in the description, or you could always email team@tackletrade.com and Mark will get you set up. With that, guys, we are out.